Hello, my name is Rick Dalrymple. I'm excited to be here with you today. We've got a very information-packed program for you that I trust that you'll find very helpful. Our topic, 3 keys to profitability in the new economy. Couldn't be more relevant during these economic times, right? Well, I want to welcome everyone and thank you for the opportunity to be with you on this call. If you're like most successful businesses that I know, you need to be cutting expenses. You're having to do more with less people, and you're trying to raise revenue, right? For many of you, profit margins are being squeezed. Some of you need money to replace assets and equipment in order to stay competitive. Now, my plan today is to show you some newfound money that may have been hidden from you in the past, or at least a different way to think about what was stolen from your profits in your past. So be ready to take some notes. The issues we just talked about, many of you face, and as it relates to your risk management program as a whole, I want to share with you some of the biggest mistakes made by some of the largest companies with their risk management program, involving things like claims management, training, and hiring. Our goal today is to educate you, or at least reinforce to some of you, some of the best practices used by businesses today, and to show you some valuable tools that are available in the marketplace today to help you in streamlining some important aspects of your business. That can help you lower your administration costs and the cost of your claims when they do occur, so that you can be more profitable as a company. As a quick introduction, again, my name is Rick Dalrymple, and I'm one of the owners of Insurance Office of America. We provide cost containment strategies, tools, and education, and risk management to all kinds of companies, including many companies such as construction operations or manufacturing, healthcare, and wholesaling operations. But to our sports fans in the audience, these are some of our clients that we take care of nationally that may ring a bell for you. 23 years ago, we had 2 employees, and today we've got over 650 employees, and we're still growing. We started with 1 office and now have 25 offices around the country. We are the largest privately held insurance agency in the state of Florida, and the 8th largest in the country. Now, I empathize with many of you who are working so hard to be profitable. I know it's especially hard in this economy when you feel like you're being pulled in so many different directions. But there is help, and as we go through our program, I'd like you to ask yourself these 3 questions, and just take a second to jot these down. Now, regarding things like your hiring practices and training and claims handling, what policies and procedures or systems do you have in place now on these issues? Are they working? Do you feel like you've got some profit leaks in your system someplace? And number 3, what could be improved? Now, you'll have to be honest with yourself on that one, and hopefully you'll hear some things today that will ring a bell for you, or you'll see some new ideas that will turn lights on for you and new ways to operate your business. Well, let me explain why you'll want to hear this message today and take some notes. Because for those of you who consider yourself to be competitive, I trust that you do not want to have your competitors pass you by. And a lot of your competition is starting to do many of the things that we'll be talking about today. Now, I will tell you that some of you will unknowingly be hurting your company and putting your company at risk if you don't do some of the things that we talk about today. Now, I know a nursing home company that had 5 locations that had some real entanglements with some claims that cost them well over $1.2 million in lost revenue and over $251,000 in lost profits. Now, I want to save you from having that kind of pain and loss to your business. Regarding our program today, I always like to answer some questions up front for you, and that is, what's in it for you? What are your takeaways from today's program? Number 1, I'd like to have you learn and understand about some strategies that can help you be more profitable, to lower your total cost of risk, the T-Core, and we'll talk more about that. Number 2, I'd like to share some best practices of today for handling workers' compensation claims. And 3, I'd like to introduce some simple tools of today to help you streamline and organize your training and claims management process to kind of give you that competitive edge. Now, my hope today is that you'll be able to take away at least one idea back to your office that you can put into practice, because I know that we'll be talking about things that can hopefully save your company hundreds of thousands of dollars, and to some of you folks could be millions of dollars in lost profits with services like things like free training and free claims management. Now, please remind me at the end of our program to share, for those who are interested and can qualify, how you can get some free HR compliance training or free OSHA compliance training. Let me run this quick question by you. Has your company had to deal with an employee lawsuit or a potential lawsuit here recently or in the past couple of years? Things like a workers' comp claim lawsuit or an EEOC issue? Yes or no? What we'll be talking about today will relate to how are you managing your risk management program. And I'm not just talking about your insurance policies, but something much bigger than that. We'll be talking about how are you reducing your business risk as a company, and what tools are you using to help you manage that, such as what training or claims management are you getting. Let me ask you this question. Who knows what some are calling to be the oldest lottery game in the United States? Well, it's called the employee lawsuit. And for those cases that get settled out of court, on the notepad that you have beside you, why don't you just take a guess and jot down what you think the average settlement cost is in the United States right now? It's actually over $32,000. And if a case actually goes to trial, the average cases today settle for over $274,000. Now, if you have an employee who is taking advantage of you in the workers' comp system, let's say they go out and see an attorney, and they settle for a small $15,000, how much do you think that claim really cost your company? Would you be surprised it's probably well over $50,000? And if let's say your company has a 4% profit margin, how much sales do you need to generate in order to pay for that small $15,000 claim? Would you be shocked to know it's actually over $1.2 million? Now, did I get your attention? Now, I'm talking to you today under the premise that you already have a pretty keen understanding that the insurance companies really are just not wired to look out after your best interest. And also the fact that claims cost you money. They can cost you big money. And how you manage them can determine your profitability as a company. Let me ask you another quick question. Have you ever had a workers' comp claim that you felt just really frustrated you? Just yes or no? I mean, you felt like the employee was taking advantage of the system and the carrier wasn't doing really much to help you, and you just knew that it was costing you money. Has that happened to you? Now, there's a reason why many of you end up getting frustrated with your claims, mainly because you feel like you're in the dark, right? There's a lack of good communication. But do you want to know one of the reasons why that happens to you? It's called overwhelmed claims adjusters. Even carriers have to do more with less these days. There was a consulting firm called Conning & Company that put a report out several years ago that reported that the caseloads of many claims departments were running about 150 files per adjuster per month. Now today, they're pushing files as many as 250 and 300 files per month. Now bottom line, do you really think that the carrier adjuster has got time to manage your claims? Let's start with a terminology that some of you may have heard before. It's a concept called the symmetry of T-core. Now, this concept was created by a consultant by the name of Rob Eckert many years ago, but the study actually started back in 1974 by a guy by the name of Frank E. Bird Jr. And he had a publication that was called The Real Cost of Accidents Can Be Measured and Controlled. Now, I'd like everyone just to stop and think about how much you pay in premiums right now and jot that number down beside you. And we're talking about everything, your workers' comp, your property, liability, automobile. Have you got that number written down? Or whatever you're paying in premiums right now, your hard cost of premiums only represent approximately 10 to 20% of your total cost of risk. Now, with $100,000 in premium, your total cost of risk is conservatively over $1 million, which means that you've got a lot of hidden costs below the waterline that you can't easily see. So your bigger cost to your company is what's below the waterline. Now, how much did your last bad hire cost you? Published stats say that workers earning $35,000 a year, let's say they've been with you for 8 months, it can cost your company over $70,000 for that wrong hire. Now think about it. The soft costs, what we call frictional cost to your company, is from the loss of production, the cost to retrain, to rehire, the cost of the claim itself, dealing with the HR issues. It's extremely costly to your company. Now, your job and what we try to do is to help you reduce the size of your iceberg. Now, you know you can't get rid of it, but you at least try to shrink it to a smaller size. You may hear some people say you can mitigate risk, but you can't eliminate it. And that's true. But I want you to think about something for a moment. When you've had agents come in and quote your insurance, what are you hoping for? Hoping for lower costs and better coverage and in some cases better service. But is there anything else going on during the quoting process other than them dealing with your policies and your premiums? Typically not. They're only mainly working on getting you a quote, which only addresses your 10% of your T-Core. Now let's say you're paying $100,000 in your insurance and someone saves you 10% on your premiums. Well, they just saved you $10,000 and that's great. But again, what's being done to address the other 80 or 90%? I mean, your T-Core is every bit of $1 million. Now what if you lowered your T-Core by that same 10% and the entire size of your iceberg? You know, that savings represents $100,000. Now hopefully I've opened your eyes to the fact that there's a lot of money that can be lost and that you will lose if you concentrate mainly on the price of your policies versus the cost of your entire risk management program. I want to share something briefly with you that will validate what I just explained to you. Now this is a chart that originated from OSHA on the indirect loss cost for a workers' compensation claim that says that based upon the size of any given claim, there's a very real additional cost to that claim. Now these factors are not etched in stone, but to give you an example, a $10,000 claim will cost you an additional $11,000 in soft costs for a total of $21,000. Now these are simply factors associated with claims other than workers' comp. And as you can see, they range from anywhere from 1.27 to 1.74. Now we have a saying in our office that everyone needs a little TLC, and that stands for training, loss prevention, and claims management. Now all these are interrelated and we'll tie them together by the end of our program. And it's our philosophy and from our experience that if you want to be profitable, you need a little TLC. Now I know it sounds very basic, but let me assure you there's some details that we'll share with you as we go along. There was a great article written several months ago that's a great read. It's entitled Recession Recovery and Workers' Compensation Claims. I'd highly recommend you take a look at it, and if you'd like a copy of it, just let me know. But to paraphrase it, it talked about the fact that after every recession, two things have happened every time. Number one, logically people start to hire again. And two, workers' comp claims have always been on the increase. Now, I want to caution some of you who haven't had any claims, or maybe you've had very low claims. Better keep your fingers crossed, because my point is that you're not above this statistic. I knew people many times who had very good loss ratios, and when things turned around, they always got bit. Now, the article goes on to say, and my question to you is, are you positioned properly to address this? As an example, do you have good hiring applications and HR procedures in place? Do you have the latest and greatest legal disclaimers that you need today? And what tools are you using to streamline your companies to be more efficient? Now, if not, now is the time to get your house in order and reinforce your fortress. Many of you probably are very organized with your record keeping on what training you conduct within your company and how you keep organized with your claim files. For some, this is their filing system. Now, hopefully this is none of y'all, but I did talk with someone last week who told me they just really struggled with all the paperwork that they had to keep track of with their comp claims. You know, they started with small paper clips, and as the files got bigger, they got to the big black binders, but they ultimately had their sticky notes. When we go through a consult with companies and do our assessments, we're looking to see what policies and procedures you have in place. And what you have or you don't have can dramatically affect your bottom line. And I'll explain how and why as we go along. But keep in mind that what we're talking about can relate to your general and professional liability or your automobile exposures. But for this discussion, I'm going to relate this mainly to your workers' compensation program. But it's what we call our 4P plan. Now, starting with the pre-hire process, what systems do you have in place for your hiring process? Then there's the post-offer step. What should you do after you've offered someone a job? Then there's the pre-claim step. What systems should you have in place before you have a claim? And lastly, the post-claim step. What should you be doing after your claim occurs? Let's start with the pre-hire process. As it relates to your workers' comp, what you have in your pre-hire process is absolutely huge in keeping your claim costs down. Number one, what does your hiring process look like these days? Do you feel you've got a pretty watertight process in place, or have you gotten rusty in the past couple of years simply because you've not been doing a lot of hiring? Do you have a good employee application